The planet's climate has become more and more of an issue to many, including in the corporate world. For example, investment funds are increasingly assessing how climate-friendly a company is before investing in it. The Carbon Disclosure Project, CDP, a nonprofit organization, has been looking at how environmentally friendly companies are based on their impact on forests, water systems, and the climate. Around 13,000 companies submitted data to the project this year. Combined, they make up 64% of global market capitalization, the most ever. But only 2% of those companies managed to get the top-level A ranking in one of the three categories. And just 14 of those 13,000 examined managed to bag the A rating for all three categories, meaning the efforts to protect water, forests, and the climate. Let's take a closer look at this with Dexter Galvin. He's Global Director, Corporations and Supply Chains at CDP. Welcome to the program, Dexter. Good to have you. 14 of 13,000 companies meeting the top criteria in climate, water, and forest protection. That's not a lot, is it?
No, it's not. And it's a fantastic achievement for those 14 organizations. But it is an indictment on the wider corporate community that we haven't done enough in this space over the past couple of decades. And we are left with 8 years to save the world, essentially.
Give us an example of what sort of environmental efforts these 14 companies were showing that others were not.
So if we take a look at the types of data that we're looking at climate change action, so their ability to report on their carbon emissions, the breadth and depth of their carbon emissions reduction targets, whether it's a science-based target, whether it's actually been independently verified by the Science Based Targets Initiative, which means their targets are actually in line with the science of climate change, whether they can account for their water consumption, and whether they have data on what's happening in their supply chain. Because on all of these topics, deforestation, water, and climate change, the vast majority of the impact is actually in the supply chain of a lot of these major organizations. So these 14 organizations will be showing that they are reducing their impact in their own operations, but critically also engaging with suppliers to reduce their impact and reducing the impact of their product portfolio downstream as well.
Dexter, can sustainability efforts be allocated to certain regions, countries, or economic sectors?
Well, there's certain, in our A-list this year, we have some clear leading countries. So, for example, Asia and Europe are the regions that have performed the best in the world this year, and Japan is definitely leading the pack in Asia. If we look into Europe, we've got 23 French companies on the A-list, and they're the leaders in Europe, followed by the British, the UK at 15, and then Germany at 14.
Why is it that these regions, these countries, and the companies stemming from there are at the forefront?
I think it's a mixture of policy environment. These countries tend to have quite advanced initiatives at the government level, some good policy structure, clear signaling from the government that that this is only going one way, that the country is going in the direction of net zero. All of those countries have clear net zero targets at a national level. I also think consumer pressure, particularly in France, the UK, and Germany, is a big driver of corporate action on this issue. And of course, those countries have quite advanced finance sectors. And in the last couple of years, we've seen an explosion of interest in ESG, as we call it environmental, social governance data. There's literally trillions of dollars sloshing around in the ESG space these days that's really helping to drive corporate action. And those companies that are taking action and getting into our A list are actually receiving a large bulk of that cash. So they're actually being rewarded by the markets.
Dexter Galvin, Global Director, Corporations and Supply Chains at CDP. Dexter, thank you.
Pleasure.